Welcome, pool guys and gals, to the Let's Talk About Pools podcast, where your host, Lauren Broom, will take a splash into many topics in the pool industry to educate all aquatic professionals. Listen in, and you just might be surprised what you'll learn. So let's jump right in.
Welcome, everybody, to the Let's Talk About Pools podcast. And in episode 43, I interviewed Greg Powell. He's with Viking Capital. And he's going to talk all about pool loans. So this is a good episode for pool builders, especially for knowing the type of information you need to know about these pool loans so that you can offer it to your customers. It helps them with financing for all those homeowners that dream to have a pool. So listen into this episode. And I also want to say thank you to my podcast sponsors, Skimmer and Blu-ray Excel. Again, thank you for sponsoring the Let's Talk About Pools podcast. So let's jump right into this episode, and I hope you guys all enjoy it.
Skimmer is an app that's built for pool service companies, and it really does everything they need to run their businesses. We have tens of thousands of techs using our app every day in the pools, in the field, and being able to just simply swipe left, swipe right, scroll up and down, take photos. Everything is so easy, it can be done with one hand. We know how hard our clients are working every day, and so we feel it's our responsibility to make sure we deliver a top-notch product and a support team that's capable of pleasing and satisfying our customers.
You can literally pick up the phone and someone will answer. And that sounds very obvious, but it's not when you talk to tech companies. And it makes you feel like you have a voice and they listen and they actually respond to it.
When I first started, we were just pen and paper, putting door tags on. We actually tried a bunch of different apps. There seemed to always be something missing. We ran across Skimmer, and this one by far been the most efficient, the cleanest, the easiest to work with.
I've looked into creating in-house ways of tracking and doing the same thing. It can be very costly. Skimmer allows you to have a customized experience because they listen to your feedback. It's like having a custom platform without the cost and labor involved in managing that.
So I was very impressed with the affordability of Skimmer, the benefits that we get in terms of maximizing route efficiency and being able to keep a record of all the chemicals used and pictures of all the pools all in one spot and information we can access immediately. It's just incredible.
The technician will do all these little clicks and say what they did, what chemicals they put in. They'll take a picture of the pool, and then Skimmer does this great report that gets emailed to the customer at the end, telling them what they did and how they did it, what chemicals they added, and customers absolutely love it.
For as long as I'm in business, I don't see myself ever doing business without using Skimmer. It's just the top of the line product to use within the market, and it just saves so much time while also being personalized to your company. Skimmer is a company that's going to keep your database and everything completely organized and in line for you.
One of our goals is to help our clients grow their companies, and we see every year, every day, we get feedback from our clients thanking us for allowing them to grow, allowing them to hire more folks, allowing them to make more money and put their kids through college, to have more time and more free time on the weekends. It's always a huge compliment when we hear our customers talk about how much they've been able to grow, how many folks they've been able to hire and employ thanks to the app.
Welcome, everybody, today to the Let's Talk About Pools podcast. And on today's episode, I have Greg Powell. He's the founder of Viking Capital. Thank you so much for being on the podcast today, Greg.
Thank you for having me.
It's really exciting to have you on the podcast. You're a new type of guest that I've had on the podcast. And I think it's going to be definitely some good information for my pool builders that are listening out there to the podcast. So thank you very much for being here.
Yep, I'm looking forward to it.
So tell me a little bit about you and Viking Capital.
I was in the home improvement financing business back in the late 90s with what is now GE, and primarily selling financing to swimming pool companies, calling on pool companies in Northern California. And in 99, I left there to start Viking Capital. Primarily because we were sort of one source for swimming pool financing. We were one lender, and the marketplace was shifting to where pool builders really needed more than one lender. So I started as, at the time, it was a mortgage company, a brokerage, doing second mortgages, third mortgages, refinances, things like that. But we were able to work with multiple banks. So when a contractor came to us with a loan that had more than just the GE loan option, that's what kind of got me to move over and start my own business.
So do you strictly just do like loans and financing for swimming pools, or are you still doing beyond that? Or
We can finance any type of home improvement, but it's all changed from the second mortgages, refis, things like that. That all sort of fell apart in 2007, 8, when everybody kind of knows the mortgage meltdown hit. All of that money dried up. Took 3-4 years probably. There was a kind of dead window in there where pool builders and everybody was going to be a little bit at a loss to find any type of financing at all. And then it has slowly kind of crept back in the form of unsecured loans, which are not mortgages. They're not reliant on the value of your property, things like that. They're basically signature loans. And now it's really slowly started to get more and more and more lenders in the business, which also opens us up to lending in every state, which is nice because we're not having to be a mortgage company picking state by state by state to be more a licensed lender in. So it's come back for the better, for sure.
and a lot of people are putting pools in their backyard, and if they don't have the equity in their house, this gives them another option, right, for finance.
Right. And it's kind of, as most pool builders will tell you, it's sort of gone crazy since COVID hit. And yeah, I was going to mention later in the podcast a little bit, but now's a good time with the mortgages, refinances, things like that. Mortgage rates, anybody that's been looking at buying a home or refinancing a home recently has seen that these rates have gone from, 2.5% up to 5.5% over, the better part of a year. And that's really made our type of loan sort of the go-to loan for a lot of people. Back in the old days, you didn't even no banks even required equity. They would just do second mortgages, even if you had no equity in your home at all. They would do third mortgages with no equity in your home at all.
Wow.
We were brokering them, and we knew it seemed amazing that the lenders were offering those loans, but they were offering them across the board. So everything was mortgage rate related. And now I think what you've got is millions of people in the US whose first mortgages are, I always use the term, cemented over. They're locked in at 2.5%, 3%. They're never going to refinance that loan. So this type of loan that's not tied to the home doesn't require, it was such an easy run for them for 10 years. They could just refinance their house, same rate or a little lower rate, grab $100,000 out of their equity pile as their homes are going up, and come into their builder. I've got $100,000. Let's build a pool. And that option's kind of off the table these days. So the unsecured option, which also the unsecured options used to be 2 and 3 year loans, and now they're up to 15 and 20 year loans like mortgages. So to keep the payment in mind.
Which makes the payment maybe a little more feasible for somebody, and they may decide, okay, I can do this. I can put a pool in my backyard. And that really does help the pool builders as well to be able to get that pool built, get the customer to buy. So that makes it a lot easier, doesn't it?
Absolutely. And larger project sizes as well. Back when it was 3 and 5 and 7 year loans, and which was about a 6-year run, they were looking at basically financing a car. So $70,000-$80,000 projects on a 5-year loan were a pretty significant payment.
Yeah.
Especially when, a lot of people financing are fairly new homeowners, young children, what have you. They recently bought their home. Most of them are trying to buy as much home as they can for the amount of money they can put down. So they don't move in with a lot of equity. They don't move in with a lot of room for a huge payment to add on top of their home payment. So stretching it out longer terms makes it a lot more feasible for them to get the project. Plus pool projects recently have gone up, as everything has. So the days of the $30,000 pool have kind of come and gone.
Yep. That certainly has. So how important is it for a pool builder to proactively offer financing to their customers? And what's the best way for them to go about that?
I think it's huge. I've always sort of separated the two concepts of offering financing versus selling with financing. Offering it is sort of a passive way of we have it available. Here's a flyer. If you're interested, you can call these guys. That's there, and it's one way to go about it. But I think what happens is, in many cases, customers don't necessarily think of that as the route to go, and they think they've got another loan that they're working on. They're talking to their bank. They're talking to their credit union. You go out as the pool designer, and if they don't really get pushed to a source like us that has 10, 15, 20-year loans, lower rates than they're going to find at their bank, half the payment, things like that, they just assume, as I would too, probably if I didn't know that these types of loans existed, they assume that the loan at their credit union is kind of the loan like other loans would be. They can check their bank and their credit union. They get told at both places they either can't get the loan done because the payment's too high, or for whatever reason, they can't verify income. We offer those types of loans too. They don't generally come back to the pool builder and say, my loan fell through. I can't afford this pool. I can't make these payments. They more go with, we've kind of decided to put the project on hold. It's not something you like telling your pool builder that you can't afford it. So the other option that's more proactive is, here's how you would apply with our finance lender, with our finance source. They specifically finance swimming pools and home improvements. They have loans you're not going to find at your bank, your credit union. We've worked with them for X amount of years, what have you. This is the route I would go. They are not going to pull your credit until they talk to you. So there's no reason to not see what they have to offer and, give them a try. And then what happens is, you can see the difference between the two borrowers. One of them feels comfortable going to a third-party source like us and at least finding out what we have to offer. The other one thinks they've already got it nailed down. One of them comes back with a $680 payment on our end. The other one comes back with either no loan or a $1,700 payment. And we just make it a lot easier for them to say yes, to buy the amount they want. Instead of being out at $50,000, they can get the same payment on $80,000 and buy what they want. So it's important, I think, to direct them to a finance source rather than just sort of say it's available they read it as if you need it. And they're buying a luxury item and they don't really like to feel like they need it.
And it sounds like that would make it a little bit easier for a pool builder to be able to get somebody financed easier, for a loan that's going to be better for that swimming pool project to be put in. It's going to be easier for them to sell that project to the homeowner.
Absolutely. And it'll sell that project and it'll sell larger projects. We do a big percentage of the loans we do are just second halves of projects. The prices and things like that have gone up so quickly since COVID hit that a lot of people out there think the pool is going to be $55,000. They're ready to go. They've either got a loan lined up or they've got their own money. And then they find out it's for what they really want is going to be 85, 90, as long as they get pointed in our direction and they come over and we take a look at it. We can grab them that extra $35,000, $40,000 where they may not see it from the other end. Also, we have a lot of niche loans that, there are so many different lenders out there that have so many different oddball programs, stated income loans for people that are self-employed and have a hard time verifying their income. There's a lot of booby traps out there that customers can fall into by just the odds of stumbling onto one of these loans at your own bank or calling someone are slim. You know?
And it's very specific. You guys are you're in a very specific niche, like you said. So you know where to look, you know what to do. And so you're doing that work for the pool builder and for the pool customer, which is giving them more options to pick from.
Yeah, it's essentially outsourcing. It's like thinking of a car dealer sort of outsourcing their finance department. Even a big pool builder maybe looks at, if they have their own finance manager, most of them, that finance manager may only look at 10 loans in a month. And then that person versus sending it over to us that looks at thousands. Our level of expertise and the lenders that we find and come to us are we learn a lot with every single customer we look at. And we've got a bank that'll fill sort of every little gap in there. And kind of, we like to say, if we can't get it done, it's probably not getting done.
That's a good way to think about it. So what are the different types of loans available today for a home improvement project? And more importantly, how do the pool builders get paid when a customer is financing their project?
So the loans are all very similar. They're just unsecured loans, signature loans for the most part. The main differences are shorter term loans versus longer term loans. So the shorter term you run it, usually the lower the rate. The longer the term, sometimes a little bit higher rate. You'll see places on the internet that'll say 2.99% interest rate. They'll say 20-year loans. They'll say stated income loans, but they're not the same loan. There's a 2.99 loan, but it's a 2-year payment. There's a 20-year loan, but it's at 7.99. There's a stated income loan, but it's neither of those. So it gets confusing when people are out there just kind of trying to shop around. So it's good to just get them in the hands of somebody that's got every option there is.
Awesome. So,
and as far as the how the loan funds, probably 90% of ours will fund with cash right to the borrower. So they'll take their money. As far as the pool builder is concerned, they're going to be the same as a cash borrower. Then we've got a couple niche lenders that have different programs for specific people, specific lending needs. Those will fund in stages to the customer or to the contractor. Contractor will request their first stage. That'll generate an email or some type of communication to the customer saying, is it okay to release these funds? They say yes. The funds get released right from the lender to the pool builder. And they're usually very favorable draws. Both the three that we offer have 10% on the final draw, which most contractors are fine with. There are some out there that are 25 and 30 and 50% on a final draw, which is kind of hard for a contractor to hang on to and wait on that last 40% for a cracked tile or something that a customer doesn't feel the pool is complete. So yeah, but most of them are cash to the borrower now. And I think that's the route the industry's going a little bit.
I want to say thank you to the Blu-ray Excel group for sponsoring the Let's Talk About Pools podcast today. So I want to go ahead and just lead in our intermission so you can hear about them. And then we'll be right back with Greg Powell on pool loans with Viking Capital. Thank you, Blu-ray Excel.
Blu-ray XL is the power of minerals working for you. Reduce your overall chemical costs and labor up to 50% guaranteed. Whether you have 20 accounts or 20,000, Blu-ray XL's direct pricing and free shipping to the pool trade have you covered. Improving pool professionals' profit and work-life balance is what they do. Blu-ray XL, the real mineral purifier. Visit them at BluRayXL.com.
Blu-ray all day.
And it sounds like it's set up very nicely with the draws like it should be, so that like if a pool builder didn't finish the project, they're obviously not going to be paid the rest of the money. And there's a lot of that going on with pool builders right now that are, so people, especially where customers are paying directly, they have the cash, they're paying the pool builder directly. So it sounds like you as a lender is set up in that what is recommended for anybody who's paying with cash, that you pay in a contract over draws, right?
Right. It allows the pool builder to follow their exact draw schedule. So, instead of a 30 at excavation, 60 at gunite, and 10 at completion, we've seen contractors that have 15 draws, and that's, to me, is great. They only want to collect money at the completion of each small stage. But if the customer has cash and the way their loan has funded is cash, they can just follow that exactly. Some of them have very small final payments. But most lenders are not going to fund directly with little 2% final payments and things like that. So
That's good. That's good to know.
it's good for the borrower, and it's good for the contractor as well.
Definitely.
And also, one of the things we help everybody with too is, as far as contract customers not wanting to release those funds, we're sort of a middleman on that as well. They come to us and say, I don't want to release that final draw of 10%. The contractor hasn't done X. We can explain to them that what they're waiting on is more of a punch list item, a warranty item. You really should release the final draw. You've trusted the builder to build your pool. You found him. You did your due diligence. If you like everything about the pool and you're waiting on, especially now with supply issues, you could be waiting on a pool heater that's not going to be here for 3 months. You really need to release that the last of the funds. A lot of times they think they're not paying interest while they sit there because they're not making payments. Interest is accruing. They don't really know it. If they get it explained to them kind of by more of a neutral third party like us, that you're not giving the money to me. I'm just explaining to you that if I were you, I would give the money over, make your warranty go into effect on your pool, and then trust these guys to kind of finish up the punch list items afterwards.
They may be able to enjoy the pool, even though that pool heater hasn't gotten in yet and installed, because it might be hot outside and you can go swimming. You don't need the heater until the winter time. So if that's what's holding things up, I agree with you.
Yep. I mean, we've seen people hold them up over an umbrella stand. They just don't want to give that last money because they just don't want to hand over the last of the money. So they're finding whatever reason they can to not do it. And the umbrella stand's not going to be here for 3 months. You just can't hold on to $25,000 of this pool builder's money for 3 months for an $85 item, but they will.
They got subcontractors to pay that have done all that work already beyond the umbrella
draw. That's where the small draw at the end kind of comes in handy. At least they don't have an enormous amount of money. And when you think that they could have dozens of these loans going at the same time, it doesn't take very long for the amount of receivables they have sitting there from pool customers to add up to, hundreds of thousands of dollars can be sitting out there waiting on small items. So we help with that process. That seems to be the biggest complaint we hear from contractors with the draw schedule, is that they won't release those final draws. And of the thousands we've done, I can count on one hand for sure the amount that took us more than a week or two to get them to understand and to free up that last draw.
So you have a good relationship and build good relationships between the builder and the customer, and
the customers trust us. They've been with us. They've gone through the loan process. And like I said, I guess we aren't technically an uninterested third party, but we sort of are, at least in the customer's eyes. And we just we're sort of a mediator, and we're not trying to get the money. So we're not the pool builder just calling and calling and calling saying, I want my money. We're sort of a little different view at it, and we give them some more information to help them get more comfortable with that decision.
That's actually a good idea. That's actually because you guys are separate from the builder and the customer. So you're kind of in the middle, and it's like, I can understand that.
And some of it's financial, the conversation is financial with them. But like I said, in most cases, they think there's no interest accruing. And just explaining that to them. Yes, you're not making a payment until you sign this last one and release the funds, but all your interest is accruing. You thought you owed $60,000. You're hanging on to $20,000. You hang on to it for 3 months. You still are gaining interest. You're putting interest back on top of your loan for the $40,000 you've already taken. You don't owe 40 anymore. You're already up to owing 45, and it's just going to keep growing. You might as well start making payments and get on top of this thing. And usually hearing it from the finance source, we could just explain it to them in a little different terms than a pool builder can.
Yep. Because you're looking at the numbers, and you know what the numbers are going to add up to. So you are able to explain that to the customer.
Yeah.
So people always think about rates when it comes to financing, but there's a lot more to consider, right, when comparing loan options. So could you explain how your company, Viking Capital, helps people compare loan options, and choose the best loan for their specific circumstance?
Sure. What we do is when a credit application comes in our door, it hits our system. We do 2 soft credit pulls, so they don't have a hard inquiry on their credit. And then it gets handed to one of our loan originators, who they'll immediately reach out to the customer. That loan originator is well versed in multiple loans through multiple different lending sources, be it banks, credit unions. He's just got multiple options at his fingertips. So then he calls the customer, gets a hold of them, and listens to what their needs and qualifications are. There are loans that carry fees with them. There are loans that don't carry fees with them, but have a little higher interest rate. So the conversation that we have with them is, are you going to pay this loan off? What is your situation? Well, we're selling a house, in next year, and we're going to pay this loan off. Well, your situation, you don't want to pay any money for that loan to get a lower rate and save yourself $50 a month, because you're going to be out from under it. You want no costs. You want the cheapest loan you can get, even at a little bit higher rate, because you're only going to make 12 or 13 payments. Versus this is my payment of $600, and I don't really have any point at which I think I'm going to pay it off. If it's a 15-year loan, it's just going on the books for me. Well, in that case, you may want to pay a little more to get a lower interest rate. There's always a break-even point. You pay a little bit, just like you do on refinances, pay a point or two to get the rate down. Mm-hmm. And there's a break-even point. You paid $2,000 and you got your payment down by $50 a month. That's saving you $600 a year. You can do the math and go, all right, in 3 years, you've made that money back, and now you're saving $50 a month, $600 a year for the rest of the duration of the loan. There are also, as I mentioned, niche loans. You'll get customers that are self-employed. They have rental properties. There could be a lot of reasons why they couldn't qualify based on a full document loan. Or maybe they could, but it's a lot of work. It's all their tax returns, it's their corporate tax returns, it's those kinds of things. And we can have that conversation. I have a loan that maybe is 0.5% higher in rate, but it doesn't require any income documentation. And they look at it and go, it's $22 a month more, and I'd really rather not go through this. I'd like to get this thing done. So we can put them into a stated income loan, have that loan done quickly. There are just so many options that they just don't know about. So it's good to be able to sit there as a qualified loan officer, knowing multiple loan programs that are available.
That it sounds so like it takes a lot of weight off the customer and the pool builder. It sounds like there's a lot to this, just from me listening to this so far. It's like, wow, it can be a lot of stress just getting a pool built. And then how are you going to pay for it and everything? So it sounds like you guys kind of cover a lot of that for both the builder and the customer.
Absolutely.
So I know you mentioned this already, that Viking Capital has a network of pool builder partners, but we'll mention that again. So you guys have a network of pool builder partners. What are the benefits for a pool builder to partner with you guys at Viking Capital and refer customers to you for financing? And is there like any setup required, any cost to the builder, any details like that?
The big advantage, I think, is, we've been at this since '99, and my education, and it goes back to even before probably 10 years before that. So we've been at it a long time. I'm very big on retaining employees. It's as you can see, it's a very niche market. It's not easy to find people that know how to talk to customers about draw schedules and things like that. So they get, I would say, almost every loan officer that we have has been with us 4 years, 5 years, 6 years. They know exactly what they're doing. We have a very deep pool of lenders, no pun intended, I guess. Some competitors of ours work with one lender, two lenders. If one of them goes away, they're down to one place, and they've got a lot of eggs in one basket. We try to spread it around. So I always say contractors should be checking us out. we check them out, but I would want to check out my financing source to make sure I'm never going to get burned on the other end of it. Also, there's a lot of technology. We've put a lot of time and energy and money into technology. If they work with Viking Capital, we have a portal. They can go right online. It's called Loan Status, and they can, every loan, right as it hits our system, it immediately shows up on their screen in live time, so they can see every loan. It's not all that important to somebody that's got one deal financed at a time. They can kind of keep track of them. But anybody that starts getting, the lifetime of one of these loans can be 60 days, 90 days, 120 days. And if you're putting 10, 20 a month into that hopper, you can have really a lot of loans that you're trying to keep track of, all at various stages. Where on ours, you can see every one of those. You're not getting an inbox flooded with this loan did this loan did this. You can see them all live. You can see which lender they're with. You can see how they're funding. Are they cash to the borrower? Are they going to be stage funded to you directly? Between all of the technology, all of the lenders, all of the different lending programs, there are almost too many reasons to mention, I think, on our end. As it's kind of the reason that you only see 2, 3, 4 places that actually do what we do. It's really hard. We have a full-time guy whose only job is just finding us more credit unions, more banks, more niche lenders to try to be able to fill every gap for everybody. Plus, sort of like I said, we just look at so many more loans than any pool builder would look at. You just can't change the learning curve. It's very hard to replace. I mean, when you talk to a car dealer in his finance department, that guy has talked to thousands of people and really knows what he's talking about, versus somebody who, you're a pool builder. You're not a finance person,
right. I kind of understand what you're talking about. Like when I go buy a car and I talk to the car salesman, he'll kind of give me numbers, but then you don't really get the details of everything exactly until you talk to the finance person, right, in their finance department. And he starts looking at all the details about the customer, and then what are the actual real numbers? What can we really do for you? Because the car salesman doesn't know that. And so you guys are that finance department where you guys know the details, you know where to go, you know where to pull the best thing for each. And it sounds like everything's kind of tailored for each customer, and it might be a little bit different. Each scenario is a little bit different.
Yeah, everything's a little bit different. The only difference between us and the pool or the car dealer scenario is we don't actually work for that builder, Exactly. So where the car dealer and his finance company are intertwined. But you're right. I mean, where the car dealer makes almost all of his money is with that finance guy. He can, if you drive them down to the 0.9 financing, he's losing money on the car now. He's losing money on that financing, on that loan. So your car now is becoming a little bit more expensive. You fall for the 7.99% loan. Now he's making a fortune on that loan. So you maybe can drive him down $1,000 on the price of the car, where they're sort of intertwined, where ours are completely separate, but It's the same general idea. Yeah.
Yeah. You guys can search out the best loan for the scenario with the customer and the financing they need for the exact project that they want to get done.
Yeah. And most of these lenders don't work directly with customers. So it's not a place. I don't have a single lender on our platform that if a customer called them and wanted a loan for a pool, they could get it. They don't do that. They only do them with a wholesale place like us that is going to put a bunch of loans in their door. They know that they're only seeing the loans that fit their matrix, that they're not going to work direct. So these guys will never find them on their own. They're just going to continue to butt their heads up against small term loans and things like that.
Well, and you've built those trustworthy relationships with those banks. When a customer calls, they don't really know the customer or anything like that, but they know who you guys are.
Right.
So that's why building those trustworthy relationships that you guys have been very successful at with each of those lenders that you guys have gotten. That's why they're willing to lend to you, but not to a single customer,
Right. And some of them require a little bit of a background check on the pool builder. That was part of, I guess, that last question a little bit was, is there any setup for these guys? It's very minimal. We just handle it on our own. And in one-off cases, we just really basically take a peek at the internet and look. And if the pool builder is getting all 5-star reviews and everybody likes them and they've been around, we'll fund that loan. And the paperwork on their end is really ACH information, just so the lender can wire them their funds. There's never any cost to the builder. There are some lenders out there that will put some type of cost on the builder, something per draw, something per funded loan. They'll have them buy down interest rates and take it out of the pool builders, their share of the revenue on the sale. So ours are all, there's really very little work on the pool builder's part and zero cost to them.
Wow, that's awesome. So how would a pool builder get more information? Where can they go?
They can always call us, or they can go to our website, which is poolloan.net, www.poolloan.net. And there's a spot on there for builder partners. They just click on that, hit a little submission, send it through, and somebody will give them a call right away. Or they can always call our office, 904-686-1702. Kevin is our operations director, and they can start with him, and he'll get them directed either over to our marketing department, depending on how far along they are, or who they're using, or what their situation is. He'll get them to the right person on our end to get them set up.
Wow. Well, thank you so much. This is awesome. It was enlightening for me. I didn't know about all these different things out there, in the pool industry. So it's always fun to talk to a guest, and I learn more, not just the listeners. So I hope my listeners that are pool builders have learned something today as well from listening to this podcast episode. Thank you.
Sure.
Thank you so much for being on the podcast today.
Thanks a lot for having me. I appreciate it.
No problem.
All right.
Thanks for diving in today with the Let's Talk About Pools podcast. Be sure to follow us on our YouTube channel or our Facebook page. And feel free to rate, subscribe, and leave a review wherever you listen to your podcasts so more aquatic professionals like you can learn about the show. We appreciate it, and we'll catch you in the next episode of the Let's Talk About Pools podcast.